Super changes, NAB show and tell what the market's up to, a Cup Day rate cut and a finance tip. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Now we've got a number of topics. We're going to change them every 2 minutes when the bell goes. So Paul, let's kick off with the super changes for Sheila's Supers. Can we say that?
You said it, Peter. I won't go there.
Well, we say blokes. Why can't we say Sheila's?
A nice announcement by the government. No detail. I guess one of these things that they're going to put up there is a bit of a smokescreen to take away with some of the other changes.
You're such a cynic, Paul. I think it's a really nice change. Women have babies, they're out of the workforce. Give them a chance to build their super up, change the rules to suit them.
Yeah, good in practice. They impact more wealthy Sheilas rather than poor Sheilas, if I can go down that path.
Yes, you
can. I think it's a bit of a sort of a nice announcement, but doesn't mean a lot.
Yeah, okay. Are there any other super changes that people should be aware of?
Yeah, there are going to be announcements as part of the process for the election next year. A definite is obviously around still looking at the way super, money goes into super and taxing super up front. So the disparity between the so-called salary sacrifice, what tax level you're paying and how much tax benefit you get.
Yeah.
At the moment, people earning between $180,000 and $300,000 effectively get a 34% tax break on super. Yeah. Most others get about 15 to 20%. Either they close that loophole up or alternatively they treat everyone the same and they give everyone effectively a 15% tax break.
Is there anything people should do before super changes come, Paul?
Look, I think you should continue to put as much money as you can up to the caps.
Yeah.
Look, that's what I think is going to happen in terms of some easy changes. The two other things that they could do, one is abandon or abolish transition to retirement pensions.
So people over 56 should get into it before it closes up?
They'll do it prospectively rather than retrospectively. And then thirdly, at some stage, I don't think it'll happen this time, but at some stage, I think they'll look at taking the tax on when super money comes out of super. Government said they probably won't do that, but as an overall strategy, we keep saying try to even up your super with your spouse. It still makes a lot of sense. So I think there's a lot about super splitting and spouse contributions makes sense.
Time out, Paul. NAB now. NAB came to the show and tell today. They were on a trading halt yesterday. We thought they were going to buy, or Nippon Life was going to buy their insurance business. So what's actually happened? Well,
a bit of a disappointing result, Peter. I've been a bit of a fan of NAB, but they do remind me about Commonwealth Bank, about 5 years behind. So I've put it down as sort of a work in progress result.
It sounded good, about a 16% increase in revenue.
It sounded up 16.5% on a cash earnings basis, but there are a whole lot of what they call specified items, which are extraordinaries. Peel those away, as they say, and it's really only up 2.4% in cash earnings. So, look, that's on the low side. Dividend of 99 cents has been maintained. Return on equity's gone down. So the market's not going to get too excited about this result. I'd say that they are still building, and it's going to take some years. And new CEOs, new management teams don't create things straight away.
What about this selling off of the life business? Is it a good idea, Paul?
Look, probably a good idea. So they're selling 80% of their life insurance business to Nippon Life. That'll raise about $2.4 billion. It'll boost their capital ratios by about 50 basis points. Says it'll only reduce earnings by about 2%. So that will put NAB at very much at the high level in terms of Tier 1 equity.
And they'll have more money to put into probably better earning type activities,
which is what they want to invest in their Australian banking business. The other thing they're doing is they've announced also the partial float of what they call CYBG, which is the Clydesdale and Yorkshire banks.
Yeah. The G's probably group, by the way.
Yeah, that's going to hopefully occur as early as February next year. Yeah. And shareholders are going to be given shares. So existing NAB shareholders will get shares in this new group, and that'll account for about 75% of the ownership. And they'll have a public IPO for about 25%. So it'll list both on the London markets, but you'll be able to trade it here in Australia. So shareholders in Australia will get a bit of a winner, hopefully, out of the sale of the UK banks, due to start as early as February next year.
Will it be based on current NAB shareholders, or if you pump them up over the next year, you'll get more?
They have a record date. Haven't given all those details, but they've announced the timetable. So the result, look, no good marks for the result. It's work in progress. But they are trying to do the right things, and so I think NAB's in that stable where I think it should be part of your portfolio.
It's a slower economy as well. can we expect?
Yeah, I mean, I would have hoped for a bit better, but we'll give it a B result, I think, is probably the bottom line.
Okay, let's go to the next one, what the market's actually doing. I noted I was talking to my colleague Ray Hadley on Saturday mornings, and I made the point, since Glencore Tuesday, when the market meltdown headlines came about, we're up about 8.8%. Not bad.
Yeah, not a bad rally, and that's probably why we've had two really quiet days on the first couple of days of the week. Looks like it's heading that way a little bit with a bit of softer stay.
Hitting the cap.
Hitting the cap. You know, we've had good leads out of the US, I think, but probably we haven't gone as far as the US in terms of the... We got hit harder, remember, on the way down, so we don't bounce back as quick.
But people could have made more money if they didn't listen to your tip about Link. Now, Link listed up 11% on its first day. He bagged it.
I did not bag Link, so let's just get this correct. I knew this would come up, Peter, so we weren't prepared.
John McMurtry says a mate of mine and was a mate of his.
I just said I thought there was better value elsewhere. Look, good Link listing yesterday. That's good for the market. Look, the challenge for Link will be not what it's like today or tomorrow. In fact, I said there'd probably be a small premium. It'll be what it's like in a year's time. But let's see how that team goes.
But the thing I don't think you emphasised, but maybe I just didn't read it carefully, was that they do business for Australian Super and other industry funds. The back office there was a kind of a new part to their business. But Australian Super was a keystone shareholder in the IPO. That, I think, is a really good thing for the business to underpin that security of that business.
Yeah, I mean, they've got some great investors. Australian Super took $100 million. I think a lot of the really good Anton Tagliaferro and others also invested. I think also George from Contango had a look as well. So they got a good rap from the fund managers. Yeah. Just at $7.07, it's now at a PE of over 27. So look, it's priced. You just got to believe the story.
Okay, our friend Julia Lee from Bell Direct thinks this market can still sneak up, towards the end of the year. Paul, do you think that's going to happen? Do you think we'll sneak up, maybe with a dip or two?
I think the banks are, certainly the worst is over the banks, and the banks are now into recovery mode. Yeah. I said Westpac's result was good, NAB a bit disappointing. ANZ comes out on Friday. We'll see. Tomorrow we'll see what that brings. But I think the banks can certainly start to take the market a little bit higher. Yeah. The negative still are oil prices. Are you still seeing that? And I can't get excited about that part of the market. But again, if we get, you want to talk about the Reserve Bank next Tuesday possibly, but any cut in interest rates, or at least interest rates aren't going up. So where else are you going to put your money? It's a real sort of same $64 question. Yeah,
well, my view is that there is good value there, and I think I'll save it for my finance tips. So I want to link it to that very issue. I don't know whether Bell's gone. I think our bell ringer's gone.
He's on walkabout, right?
He's on walkabout. I'm changing topics because you brought it up. A Cup Day rate cut. Now I think there's a very good chance that Glenn Stephens, who doesn't want to cut interest rates, might do it because the banks have kind of surprised the Reserve Bank by raising interest rates. I don't think the board would have expected that. So there's going to be a bit of a discussion next Tuesday, Cup Day. And Cup Day is quite famous for rate cut changes. So I reckon they're going to say, well, hang on, we don't want rates to go up. We don't want the economy to slow down. We better offset this and put a cut to the cash rate down. And that would mean that, let's take Westpac. Westpac was going to raise by 20 basis points. If the cash rate goes down by 25, maybe we'll receive, if you're a Westpac borrower, a 5 basis point cut. If you're a CBA, it would be 10,
it would be 10, that's correct. Look, I'm not quite with you on that, Peter, but we can talk about that next Wednesday.
Yeah. So, but why aren't you? This is mad about money. Well, why aren't you as mad as I am about a rate cut?
Well, I just looked at what they said last week. It was actually a very bullish statement. The Reserve Bank said last week.
Yeah, I like
that. They
that.
actually talked about stronger growth than people were
September
suggesting.
Quarter.
September quarter. And then also they were suggesting that the employment market is a lot tighter than other people have said. So look, maybe today we've got CPI out today. If we get a really low CPI, if the target rate's a lot lower, it gives them more room. I just don't think they'll give in to the banks that quickly. But you're right. I mean, look, it's not out of the question. And certainly the market is about 50-50 now on a cut next Tuesday.
Yeah. Well, I was arguing with all the economists out there who think there could be 2 or 1 rate cuts ahead. I thought the Reserve Bank got right. I thought where rates were perfect. I thought the economy would improve over 2016, and maybe late 2016 we'd see the first interest rate rise. This to me is too early, and if I was on the board, I'd be hopping mad and saying we have to fight the banks on this one because they need to do it for their balance sheet, but we need to do it for the economy.
They did it for us, a really important group called the shareholders, Peter. So.
Don't worry, I'm a shareholder as well. Okay, all right, there's the bill. Now the finance tip. Now this is an interesting one, Paul. I'm quite happy for you to argue with me. But and you made the point that banks at this point in time look like good value and probably will sneak up. Now, I say to a lot of people, well, we are living in a new environment. Once upon a time, if you didn't get at least a 5% better return on your stock market investments, you would have thought, oh, gee, that's not good. Why? Because term deposits were about 5%. But now they're around 2.5%. We only have to make 5 or 6% return on the stock market, and you've had a good year. And I think this is the important thing. I'm looking at buying those sort of bank shares now on this basis, even if I buy ANZ under $30. And in 3 years' time when there's a crash, ANZ drops to what, 16? I still get that yield unless they cut that dividend unbelievably. And banks don't have a history of doing that too. So I think it's a pretty good bet that if I put my money in today and I think I'm getting about a 7 or 8% return with franking credits, that's a great return, which I've got until I sell ANZ.
Well, I'm not going to argue with you, Peter, today, anyhow.
Yeah, well, but so is it fair thinking, apart from the fact that if ANZ had a shocker and they cut their dividends unbelievably, but they've never cut dividends unbelievably. They've done little cuts, but not
Look, I think that's a reasonable strategy to take, Peter. You've just got to be prepared to wear out maybe a little bit of pain. But I think banks are a little bit in recovery mode. Yeah. Interest rates aren't going up. Where else are you going to put your money? So I think there's upside in them.
I just think what you get today is going to be, in yield terms, fairly constant. You might lose 1 or 2%, but still, it'll still be a good number.
That must be the bell about to ring again, Peter. So,
well, I think we've said enough. Well, I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.